And today we will talk about MicroStrategy, aka strategy, and whether they will be forced to sell their Bitcoin soon, and whether we should be concerned about Saylor and their whole strategy of buying and holding Bitcoin forever. So I have always wondered about this because there's so much misinformation out there. And really today I wanted to dive into all the potential points of risks. And I've done, just direct research instead of like just doing some AI slop, trying to, let other people tell me what it actually is. And that's how I want to structure today's video. So I will go through a whole list of risks, real risks that MicroStrategy does pose on the market on Bitcoin right now versus the ones that are FUD. And hopefully by the end, you can see why there is some risk, but for the grander scheme of things, it's way more concentrated towards MicroStrategy themselves versus to the market of Bitcoin. Okay, let's go ahead and start right now. So let me bring up my talking points here so I can go in order. So first, why are we even talking about this? Why are we concerned about this? So MicroStrategy, everyone knows, is a very big company that holds a ton of Bitcoin, but especially now, they are by far the biggest holder in Bitcoin for corporate treasuries. So their actual size is not to be taken lightly. So here is the public tracker of all public companies and private companies and governments holding Bitcoin. And you see Strategy here holds 650,000 Bitcoins. Now that's not only over 3% of the total supply of Bitcoin, the 21 million, but also they hold together more than every single other country combined. Every single other government entity holds in total of 647,000 Bitcoins. Whereas Strategy themselves, one company holds 650,000. That's huge. And when you compare, when you put together all public companies and private companies, it's 1.3, almost 1.34 million coins. So Strategy is almost 50% of all public and private companies holdings in total. So if you don't account for ETFs, which is the real Wall Street, effectively Strategy, one entity, is almost 1/3 of all other like big entities holding Bitcoin. That's why it's so significant. Okay, so that's the gist of it here. It really seems quite scary. So we have to look at the actual numbers of how much do they contribute to the buyings and sellings of Bitcoin, and this big holding of theirs. Is there a big risk here that they will be liquidated or they will be forced to sell? And that's why we want to do this today. Okay, and the tertiary effect of this is that because Strategy holds so much, every time that they do anything, it has the sentiment effect on Bitcoin because Saylor and Strategy is the main character of Bitcoin now because of this. When you consider really, if you pick one guy, one entity, it has to be Strategy. Because the government, well, we know that, first of all, like no government holds more than Strategy themselves. And second, the governments are way bigger. So even if they buy or like they sell their holdings of Bitcoin, we've seen that happen. We've seen Germany sell 50,000 Bitcoin in like a couple of weeks and it was totally fine. And we know that it kind of makes no sense for other nations to be actively buying and selling Bitcoin because it's very easy for them to get the Bitcoins already. They just seize it, but it's very hard for them to buy more by using taxpayer dollars. So it basically never makes sense for them to sell unless they really just don't believe in Bitcoin at all, which at this point, basically all nations are somewhat warming up to it. And then you look at the companies, I mean, everyone's just following Strategy. So it makes sense if there is one big entity that, is kind of bullish or bearish on Bitcoin and everyone's concerned, it's Strategy. Okay. So how did Strategy get to this place? Well, they had this thing that seemed like an infinite money glitch, aka the mNAV premium. So how does this work? It's actually very simple. You see here, there is the Bitcoin holdings in dollar values of Strategy. They currently hold just under $60 billion in Bitcoin, whereas their market cap is 53 billion. So when you divide the market cap by the US dollars worth of their Bitcoin holdings, you get the mNAV, multiples of net asset value. I believe that's what it stands for. So right now you see the mNAV is sitting at 0.889. So the infinite money glitch basically comes from that when Bitcoin goes up a lot and people want to speculate and they see Strategy as a faster horse than Bitcoin itself, they buy up Strategy stock. So when Strategy's stock has a over 1 mNAV, what they can do is, because people are just like very euphoric on Strategy stock, MSTR, Strategy themselves can issue more stock to raise cash and then use that cash to buy Bitcoin. Now, this is good because if their market cap is higher than their Bitcoin holdings, what happens is they are able to not dilute the existing shareholders, okay, even by issuing more stock. So because everyone so far, when they buy Strategy stock, basically they're looking to gain exposure to Bitcoin, higher upside exposure to Bitcoin. So all they care about is per one share of Strategy, how many Bitcoins do they hold? So as long as Strategy's mNAV trades above 1, they can issue more Strategy stock to use that money to buy Bitcoin, and the existing holders will still be happy because their per share Bitcoin holdings is increasing. This is the so-called infinite money glitch. Now, obviously, it's not infinite because when the market is in a downturn, Strategy goes down faster than Bitcoin's price. As we've seen recently, this is the Strategy versus Bitcoin chart. It goes down. When this goes down, it means what? It means that mNAV is going down. And when mNAV is below 1, Strategy can no longer issue more shares of their stock to buy Bitcoin because this is now dilutive to their existing shareholders. So that's the gist of it. The infinite money glitch seems to be broken. Now we'll talk about why. We'll actually show you an example of how this has recovered before in the 2022 bear market. It will take a while, no doubt, but it has recovered before. Okay, so let's get into the actual list of risks versus FUD. Here we have, I'm just checking this. Okay, good. So the first risk that I have seen people talk about and is real is this recent news around the MSCI World and MSCI USA Index. So you guys have probably seen this. There's a big deadline by January 15th where the MSCI or Morgan Stanley Capital Index, I believe that's the name. So this is a big index that tracks a certain amount of companies, just like how the S&P and the NASDAQ 100 works. So because currently Strategy is in the MSCI index, but the MSCI index guys are saying, hey, we want to hold this potential like discussion on a new rule to exclude companies which holds more than 50% of their total assets in cryptocurrency. And they're saying that these are more like funds instead of companies. And the index only tracks companies. So by January 15th, they will announce whether they will instill this rule. And then once this rule comes in place, then obviously MicroStrategy will be removed because they hold the majority of their assets in Bitcoin, which is a cryptocurrency. So this is a big event because the MSCI index is very big and Strategy could see $2.8 billion in outflow if this rule comes in and then they remove Strategy from that index. So all the current investors in this index will automatically get rebalanced out of Strategy. That's $2.8 billion of outflow. And there are bigger potential outflows that could happen if other indices do the same and start to exclude crypto treasury companies such as MicroStrategy. And that could lead to in total of up to $8.8 billion of outflow just from index exclusions for strategy. So for example, you have the NASDAQ 100. By the end of 2024, there was a big event. Strategy got included in the NASDAQ 100, the 100 largest companies on the NASDAQ. But they could also remove strategy as well, just as an example. Okay, so this is risk number one. It is real. We need to watch out for this decision to come out on January 15th. There's a big uncertainty period, for sure. This, however, only impacts strategy price directly, but not Bitcoin price, because just because people sell strategy stock and strategy stock goes down doesn't mean strategy has to sell their Bitcoin. Okay, that's later in the FUD section that we'll discuss. But this impacts MicroStrategy price, stock price for sure, whether this comes out or not. Okay, before we continue, wanted to give a quick shout out to today's channel sponsor and channel partner, Reserve Protocol. So I've talked about this recently as well. So they have a new product line called the Decentralized Token Folios, DTFs, which are very similar to ETFs in the traditional market, but DTFs apply to crypto. They are one token that represents a basket of assets that can give you diversified on-chain investing without banks or intermediaries. So think about Vanguard as the issuer for ETFs, whereas Reserve is an issuer for DTFs. Now, the largest DTF is actually pinned right on top of CoinMarketCap, called the CMC20, CoinMarketCap 20 Index ETF. That includes the top 20 largest cryptos, and they are weighted by market cap. So this is about 68% weight in Bitcoin right now, and quite a bit heavy in Ethereum as well. So they use a very similar methodology to traditional ETF weightings as well. Very cool. It's not just a blank basket. And all of these assets are audited on chain. They're fully collateralized with the real coins, and they are composable with DeFi. So you can trade them on centralized exchanges or decentralized exchanges, such as the CMC20, and you can use them in DeFi just with one token. So you can check it out, CMC20 on CoinMarketCap. And they also have some other indices if you want sector-wide exposure. So currently, Reserve has $231 million of TVL in these DTFs. And for example, there's an open stablecoin index, which tracks stablecoin issuers and similar protocols in DeFi. There is something even for the meme guys, Clanker Index. This is a base AI agent-focused index that's very low cap, but they do have a partnership with Reserve. So it serves all purposes. And Reserve themselves even partnered with Bloomberg to give you the Bloomberg Galaxy Crypto Index. This is a real index product that Bloomberg tracks in price, but they implemented it with the same weight on chain using Reserve, using the DTF platform here. So very cool. Reserve is also backed by Sam Altman, Peter Thiel, and they're growing month by month with just these DTFs. So this is a pretty cool product, really cool DeFi primitive that you can use very easy to get exposure to a sector of the market or just overall weighted market like an S&P 500 for crypto. Okay, so that's it. Check it out. Reserve Protocol on X, or you can go on CoinMarketCap to find the CMC20 index and try it out for yourself if you want to see how the market is doing, or gain one-click access to a basket of the blue chip altcoins in the market. Okay, let's get back to it. Next, I wanted to cover the number 2 risk that I see is real for MicroStrategy, and that is MicroStrategy cannot buy any more Bitcoin unless mNAV goes above 1. So like we have discussed earlier, since MicroStrategy cannot issue more stock to buy more Bitcoin without diluting their shareholders are not going to be happy if they do more issuance while mNAV is below 1. So very straightforward. Michael Saylor is kind of in survival mode with this tweet. This was kind of a dumb tweet, to be fair. It really looks like he's abandoning ship here. But it is true to some extent. When you track, all the trackers of Saylor Tracker, etc., all the bubbles that Sailors are and MicroStrategy are buying at, even though prices are low, they're kind of forced to buy very slowly now. They can't raise that much cash to buy more. So that's sad. That is a big risk. The MicroStrategy bid is particularly weak when the market is weak. It's just the nature of it. Maybe they could have saved their cash a bit and, raised when Bitcoin price was high and kept it in cash and then bought the lows. But then that's more trading. I guess they don't really care about trading. They just care about raising as much as possible, which only happens when price is going up and making new all-time highs. Hence why they're usually a top buyer, not a bottom buyer strategy themselves. Okay, so risk number 3. Obviously, since we're not going to see that much more Saylor bubbles popping up on the trackers, as long as mNAV is below 1, there is this market sentiment that it's changing, where every time market drops, Saylor comes out and says, we bought a lot. Well, Saylor is not going to be able to do that often. You see, more recently, they announced this raise of $1.44 billion. Well, it used to be that they raised money to directly buy Bitcoin, but this time around, they couldn't do it. They needed that money for their cash pile to pay dividends, which we'll cover in a bit. This is a much more sustainable strategy. It's much safer for the company to not blow up, to not get liquidated, but the narrative is kind of shifting. So that is true. Now, it is not true, however, that just because they cannot buy very easily by raising more money doesn't mean they have to be selling. So even though there are a certain amount of FUD out there that says, hey, like mNAV below 1, strategy must sell Bitcoin, that is not true. That is not true. We'll cover this in the FUD section in a bit. It's only true if they need the cash, but because they have $1.44 billion in cash, this is not true. Okay, so I get it. The sentiment is shifting, that they're not always aggressively buying, but it doesn't mean that they have to be selling. They're not forced to sell at all right now. Okay. Risk number 4. So there is a big index out there. I don't know if you guys have heard of it. The S&P 500. Now, ever since early 2025, Strategy met the requirements to be included in the S&P 500 by market value, earnings, trading volume. They met all the criteria, but they have never been included yet. So every quarter, I believe, is it every quarter or every month? I'm not sure. The S&P 500 comes out and does a rebalance. And they will add new companies into the index and remove companies that are no longer meeting the criteria. Now, the S&P has not added MicroStrategy. Why? Because, the S&P Dow Jones indices explicitly excludes ETFs and ETF-like structures from the S&P 500 methodology. And because of this, it has been very vague. Is Strategy an ETF? Does it have an ETF-like structure, or is it more like an operating company? It's unclear thus far. So S&P 500 hasn't come out and said, "Oh, we're never going to do it," but they did say they have been basically always been considering it, since Strategy is dominated by its BTC reserves. Even though it has some recurring software revenue, and it has employees, it has developers, it has costs, and it does like financial engineering. And there are other types of companies who hold, for example, hotels or other types of assets and operates them. And they are considered operational companies instead of ETFs or funds. So they are thus qualified to be included in the S&P. It has been kind of unsure. So if the MSCI excludes Strategy, then the S&P inclusion is probably not going to happen. Okay, because obviously the S&P is going to be more strict. So we'll see. This is a big risk. This is risk number 4. If MSCI excludes strategy starting from January 15th, chances are the S&P is not going to happen until MSCI adds it back in, which, I mean, we don't know when. And you also have the NASDAQ 100, which might exclude them. So the S&P is kind of the top of the line, and big risk there. So that's why this MSCI news is really the major risk right now. Okay. And then finally, risk number 5. So why is all of this news even happening right now? There's been speculation that this is all related to Wallstreet Giants like BlackRock and Fidelity, Vanguard, all these guys coming together and trying to take down MicroStrategy because it's a major competitor to their Bitcoin ETFs. This makes sense. I mean, when you have strategy doing so much and offering their equity vehicle to investors, which are more flexible, and not only do they have MSTR, but they also have other tranches of different things that apply to different types of investors. The ETF, the Bitcoin ETF, is not does not apply to every type of institutional investor. So that's the major loophole that strategy is tapping into, and BlackRock doesn't like it. So there's this conspiracy out there that says the reason why MSCI is even considering removing strategy is because the ETF cabal, they want to target strategy. So here's some timeline recently. Q3 2025, big institutional investors, including BlackRock, Vanguard, Fidelity, and others, sold in total of $5.4 billion of MicroStrategy shares. Very big amount. And then by the end of the year, JP Morgan analysts came out and really highlighted this MSCI and NASDAQ 100 index rebalancing and the rules that could push them out. So by January next year, we will know. And then the broader trend is maybe it's ETFs versus treasury companies. And when you compare really BlackRock versus strategy, strategy is not going to survive. So that's a big risk. If you are a major strategy holder, I would be scared because you don't want to go against BlackRock. You're guaranteed going to lose. So that's a risk. Not so much for Bitcoin, because if this is true and it's a big conspiracy, well, it just means BlackRock wants all the Bitcoin for themselves, and Fidelity wants Bitcoin pie as well. So it shows higher demand long-term for Bitcoin and going into the Bitcoin ETF issuers. But it is very bearish for strategy specifically, and for crypto treasury companies as well. Okay, so that's risk number 5, applying to MicroStrategy stock and the company, but not to Bitcoin long-term. Okay, now let's go into the FUD section. And this is actually very interesting because I've seen a lot of weird takes on this. Take a look at this, for example. Way too many people treat these things all in one blurb and just mix it all together and says, hey, MicroStrategy has this big pile of Bitcoin. There's this number called the mNAV. If the mNAV is below 1, they need to sell all of it. That's not true. Okay, so let's dissect it one step at a time. You probably have heard of this. MicroStrategy is heavily leveraged. This is true in some sense, but also not true in the pure sense. So it's not true in the pure sense that their holdings of Bitcoin is not highly leveraged. They have 1.12x leverage on their holdings of Bitcoin compared to their collateral. So if you consider it as a trade, it's quite low risk. Bitcoin needs to go down more than 90% for this to be, like, overall, if you treat it as a trade, to be liquidated. Okay. However, MicroStrategy stock is like a leveraged bet on Bitcoin. We all know this. Okay, so you compare Strategy's coin price, Strategy stock price versus that of Bitcoin's price. You see, when Bitcoin rallies in yellow, MicroStrategy rallies faster. When Bitcoin falls, MicroStrategy falls faster. and rallies, strategy rallies faster, falls faster. So it's a leveraged position in volatility, yes, but not in liquidation sense. Okay, so that's FUD number one. FUD number two. There's this big number floating around that strategy has here. So recently, late last month, the CEO of strategy, Feng, he did this podcast on what Bitcoin did, and he highlighted that they have what is like around $700 million of dividend payments that they need to pay per year, and they don't have a lot of cash. So he said, okay, we will pay dividends back, and if we have to sell our Bitcoin, we would, if we cannot sell equity instead to raise the cash. Now, big difference here, okay? People took this very literally and said, oh, if mNAV below 1, they need to sell Bitcoin. That's not true. So here is the actual summary of the 2 points, if I can show you. So here, they showed this in their one of the slides in their presentation in Q3, end of Q3, and they said below 1x mNAV, if they need to sell Bitcoin, they will. So this is the first time that they showed it, and it caused a huge amount of fear. But why would they do this? It's to fund their USD reserve, okay? It's a cost. It's like there's a cause and effect there. It's not like mNAV above 1, they always buy Bitcoin. mNAV below 1, they always sell Bitcoin. That's not what their company is structured like. Okay, their goal is to increase the amount of Bitcoin per share that their shareholders keep. That's the whole gist of it. So they will only need to sell Bitcoin if they cannot fund USD reserve to do what? To pay dividends. Here, 1.75 years of USD dividends. So the reason why there's this number, 1.75 years, what is this actually? This is how much cash that they currently have just raised to pay dividends. So they don't need to raise more cash for over the next 1.75 years. So if it gets there, yes, they could sell their Bitcoin, but not for at least another 1.75 years. The range that they've given is 21 months. So the math is like this. They owe around $700 million of dividends per year. They just raised $1.44 billion of USD reserve. This is 3 days ago. And this now makes it irrelevant, this kill switch that they have to sell, because there are two criteria here. Number one, if the company's stock trades below 1x mNAV, and number two, if MicroStrategy cannot raise new capital through issuing new equity or new debt. But guess what? They just did. They just issued, I believe this is equity, $1.44 billion of new equity to raise USD, to raise cash. So they no longer meet this second criteria, which means they don't need to sell Bitcoin. Very straightforward. They can continue to pay their $700 million per year of dividend for 21 more months. That's the official number that Feng has given in his latest interview 2 days ago. So that's FUD number 2 dispelled. They don't need to sell Bitcoin in order to pay their dividend obligations. They do not. FUD number 2. Number 3. Does strategy need to sell their Bitcoin to pay back their loans? Okay, because they have basically two major outflows. So there's dividend payments, and then there are loans. Well, this would be like a liquidation, if you really have to call it, getting margin called on their loans. So that in order to explore this, strategy themselves recently came out and published this. This is the BTC rating. So all of the credit lines that strategy has taken using their BTC holdings. And some news outlets have already picked this up and basically summarize this as Strategy still has more than 2x the Bitcoin holding value to cover twice as much as their loans, even if Bitcoin price goes to $25,000. So very straightforward. You can find this on Strategy's website or on their X. And here is the dashboard. So here's how you can read this, okay? This is their USD reserve that they just raised, $1.44 billion we've just mentioned. And in this section is their debt, okay? The debt portion is the convertible notes that can actually be, that are actually owed back and they need to pay back. Whereas on the bottom here, these preferred stock, these are not debt. These are preferred equity, which are not owed back. They don't have to be paid back. They can be converted to company. They can be converted to common stock to be sold, or they can be converted to assets of the company if it gets liquidated. So they can claw back the amount of Bitcoin, but they cannot claw back the actual just USD dollar numbers. So that's why the actual loan, the debt portion that Strategy owes, is this, the top portion here. And the total debt that they have is 8.2 billion. The notional is 6.7 billion. So you can use this dashboard like this. So 25,000 is the simulated number that Strategy put out as like a worst case scenario for Bitcoin price to go to. Even if Bitcoin price goes down to 25,000, Strategy can still pay back all of their convertible notes, aka debt that they owe, with over 2.4x the amount, even if Bitcoin price goes down to 25,000. So what is the actual liquidation price of Strategy? So that they need to sell all of their, so they need to sell their Bitcoin in order to pay back the cash that they owe. It's something like $10,000. When you input 10,000, roughly that. And also this is accounting for the latest convertible note expiring in 2032. So the first one is in 2028, and to pay that amount back, it's still over 7.8x. So this goes to show you, okay, does Strategy have a liquidation price? Yes. But it's very, very low. It's like below $10,000 per Bitcoin. So depending on how you see it, if you see really Bitcoin going that low, sure. If Bitcoin goes to 10,000, Strategy will add on the pressure and literally sell down Bitcoin to, I don't know, like $3,000, $4,000. But we have to get there first, and it's highly unlikely for that to happen. So I treat this as FUD. I don't see this happening. And unless Bitcoin drops below 10,000, Strategy does not need to sell their Bitcoin due to some margin call, due to liquidation. This is a FUD. FUD number 3. Okay. Next, what is the number 1? Yeah. FUD number 4. So here are some positive things. Where do we go from here? We see that Strategy's mNAV is very low now. It's below 1 here. It's 0.889. Can Strategy still recover, or is the infinite money glitch completely broken? Well, it has recovered before. So there are charts out there, for example, on bitcointreasuries.net, where you can track the mNAV historically, comparing Strategy's stock price versus Bitcoin. And you see in 2022, until March, not even until March, until June 2023, Strategy had year and a half of mNAV trading below 1. And during this period, they could not buy more Bitcoin. They could not raise more cash to buy Bitcoin by issuing more stock, but they survived. And since Bitcoin price started to rally again, the mNAV became positive, above 1 again, and they were able to run it back. So it's not necessarily the end. Could it never recover? Yes, it definitely could. If the Wall Street cabal really pushes it down that far, it could. It could never get above 1, but it has happened before. So this is the only data point we have. We have one other data point. In the 2022 to 2023 bear market, Strategy did have mNAV below 1, but it recovered. So I treat this as FUD for now. Even though mNAV is below 1, doesn't mean it cannot recover. Okay, and then FUD number 5. A lot of people are saying, hey, this bull run has been only driven by Michael Saylor and Strategy. And if we don't have the Saylor bid, Bitcoin cannot go up anymore. Well, that's also kind of untrue because analysts have done the math on this. So here is some rough numbers. So Strategy's trading volume, if you look at all historical, accounts for just 3.3% of all trading volume of Bitcoin. In really high periods, when Strategy raises a lot of money, especially during peak of the bull runs, when cash is very easily accessible for them, they amount to about 8.4% of volume. So that's not all of it. Now, it's quite a bit, yes. And basically, between 3.8% of the bid on Bitcoin has been taken away. That's true. Because they themselves are mainly buyers. They're not sellers also. You have to consider that. Out of all the volume on Bitcoin, it's buying and selling, but Strategy so far has only been a buyer. So there is at least 3 to 8% of the buy pressure that's been taken away. That is true, but they're not all of it. Whether you consider how big or small it is, it's not so big that it will cause Bitcoin to die. No. And what's more interesting is they don't have a strong correlation because Strategy's core business model here is actually to raise a lot of money to buy Bitcoin, to increase their size, but it's not to trade Bitcoin. It's not to buy Bitcoin at bottoms. This is why the correlation between Strategy's buy volume and Bitcoin price is actually very low. It's only around 25%. This makes sense. When Bitcoin price is low, the froth is very low, and Strategy stock price trades low, and thus mNAV is very low. So it makes it very hard for Strategy to raise a lot more cash to buy Bitcoin. And that's why their buy volume will be low when prices are low. So you can't really blame Saylor and say, hey, why do you buy when price is high and not when price is low? Because only when price is high do people want to give them a lot of cash to do it. So that's just how the market works. You can see how it is, but I think the summary here on FUD point number 5 is Saylor and Strategy is not the only buyer of Bitcoin. Certainly not the only driver of this bull run. And just because Saylor is not buying a lot now doesn't mean price cannot bounce. If anything, it's kind of the opposite. Because Saylor is kind of forced to buy tops. He can only raise cash when price is very euphoric. But when prices are low, he is kind of forced to not buy based on how his business and fundraise works. So I would say that's FUD, particularly for Bitcoin's case. When Saylor cannot buy as much, it usually means the market is not frothy. The market is very low interest, and Bitcoin is very cheap right now. Okay. So a bit of summary before we jump into Q&As. I have given you guys, how many? 5 risk points. Risk point number 1, MSCI. The index exclusion, the decision will come out on January 15th. This is huge, okay? Because this will cause a cascading effect. If strategy gets excluded from this index. It will probably spill over to the NASDAQ 100. And FUD number two, risk number two related to it, it will make it much harder to be included in the S&P. Risk number three, the premium on mNAV is disappearing, which means strategy cannot be buying Bitcoin now until mNAV gets above 1. Risk number four, market sentiment on this is obviously very low because everyone wants to see Saylor come out and tweet that they bought a lot, but they actually cannot do so now. And risk number five, this could be a big conspiracy, collapse event that applies to MicroStrategy but doesn't apply to Bitcoin. If it's a conspiracy that Wall Street cabal has, like BlackRock wants to drive out strategy and let everyone go into the ETFs instead. Okay, these are the risks. The FUDs, number one, strategy is not forced to sell all their Bitcoin when mNAV is below 1. That is not how the mechanic works. This is heavily FUDed and untrue. MicroStrategy is not heavily leveraged in the sense of their loans. They are only 1.12x leveraged. And when it comes to their dividends, they have 21 months of cash that's available to pay their dividends, which makes them not needing to raise any more cash for the next 21 months. So even though they have this slide showing that they could, the worst case scenario, after the 21 months, 1.75 years, if they still don't have any more cash raised, they could sell Bitcoin. But that's after the 21 months. You have to read this slide in total and look at the presentation that they made. You can't just say, oh, I see this 2 words, sell Bitcoin. That means they will sell Bitcoin. That's not how this works, okay? That's not true. FUD number two. FUD number three. Strategy does not have a margin call that's that high. Their margin call is actually very low, below $10,000, because not much of their funding has come from convertible debt, 8.2 billion, whereas much more came from preferred shares. So 8.2 billion of the convertible debt, these will need to be paid back, but because their Bitcoin holdings is so much larger, they have a very large buffer. Bitcoin literally needs to go below $10,000 for them to be margin called on this. So I don't think the risk is there for this. They don't need to be a forced seller, forced liquidator of their Bitcoin because of their loans. They don't have that much loans in comparison to their Bitcoin holdings. And you can track this yourself directly on Strategy's website. FUD number four, strategy can recover. They have done so before. Even when mNAV trades below 1, it doesn't mean the machine is forever broken. It just needs Bitcoin to go in the bull market again, just like from 2022 to 2023. And finally, FUD number 5, strategy is not the only driver of this Bitcoin bull run. They only made up about 3 to 8% of the trading volume, although only on the buy side. So a big buyer has disappeared for sure. But usually when strategy cannot buy, that means the market froth has disappeared, and that usually means Bitcoin is at a very low price. So you can maybe look at, okay, Bitcoin's price when mNAV is below 1. Back in last cycle, this was when Bitcoin was 38,000 until about 16,000, and then by the time mNAV trades above 1 again, Bitcoin was already above 34,000 again. So if you only wait until strategy can very easily issue new equity to raise more cash to buy, that's when the market is already pumping. You're not going to catch the bottoms using this signal. So in a sense, while mNAV is below 1, as long as you believe in Bitcoin, this is actually a pretty good time to be buying Bitcoin. Before I go, okay, so 2 things you should check out. Number 1, check out our trading bot links on Powenex and all my current trades on altcoins and our portfolio. First, link in my bio. And second, check our follow me on X at VirtualBacon0x for day-to-day tweets On Altcoin Alpha especially, I don't have as much time to make them into videos. So for trades, X is the place to go to find them. All right, that's it. Thank you for the questions, and I will see you on the next video and next live stream.